All right, let's get going on here in crude oil. So what we want to do on crude oil is this. The first thing we establish is we establish trend. We use these moving averages on the black chart over here for trend. If the trend is down, we're allowed to sell the first test of these red lines called HVA on the black charts. We have an HVA, which is red. We have an LVA, which is green. My HVA was 49.33, so I projected it over here on the Ninja charts at 49.33. As price moved up, we moved up. When we got into 49.33 on the first test, I want you to look for a doji or spinning top. It's the only two things on my Renko bar you look for a pulling bar. It's not just enough that we came up to 49.33 in my market profile. My market profile is notorious. Sometimes they'll call the exact high or low to the tick. It's very, very effective. We did it yesterday. We did it the day before. For you new trials that were in the room, you can see how we do it. It's gorgeous. Got to be the first test of the area, though. So we come up into the 49.33. We get into it. We look for a doji or spinning top on my Renko bar. A doji looks like a plus sign or a cross. A spinning top is in blue. This is called my number one trade off the black charts. There's only two trades on the black charts. It's called a number one on the black or number three. There's only two trades to know on the black charts. Number one is with 5-minute trend. If 5-minute trend's in a downtrend, you sell the first test of the red. I got a little cheat sheet for you. It says how to trade the black charts. It tells you exactly to do this on a one-page sheet. There it is. I just put it over in the room. Go under to documents on the bottom right under documents under Omnivia. You can print 2 PDFs out. They're 1 page each. How to trade J-Signal. How to trade the black charts. It says how to trade the black charts. It says this. The first thing you do is establish trend. Trend is down. Moving averages are down. So you sell the first test of high value area. High value area on my black charts are the red plus signs. Low value area are the green plus signs. You're not allowed to buy the low value area in a downtrend. We can't buy this down here. We're not allowed to buy this. This is where we get out on our position. You don't buy low value area down here because you're in a downtrend. You sell high value. So the goal, your trading goal is this, is you try to take it from high value to low value if it's in a downtrend. See, here's low value down here, put in green on the black charts. I'll put over here what it looks like. So here's low value. Our goal is to go from high value all the way down to low value. And what we do is we use the symmetry dots after we get in to scale out and try to get that runner going all the way down to low value. So we just had a trade from 49.25 all the way down into low value, down to 85. We had a $400 trade per one contract right there alone. Just based upon selling the first test of high value area and using my symmetry Renko bar to pull itself in off a doji or spinning top. It's just got to come within 2 ticks, no more than 3 ticks of this red if you're in a downtrend, and then you pull yourself in. It's got to be a close, Bill, like this. Watch. As we move up, okay, you can see this is where the high value area was right here, right? I projected it over here. Here's a high value at 49.33 on the black charts, right? As price moves up on the Renko bar, you see price are blue, green bars, green bars, green bars, green bars, green bars, green bars. Then we get into high value area. You see this big plus sign right there, Bill? See that big plus sign? That's called a doji. See right there? That's what you're going to play off of for your pulling bar. It's either going to be a doji at the high or a spinning top. A spinning top are in blue right here. They're automatically in blue. Or it's going to be a doji. You see how those work? Hand me a Y if you see that plus sign. That plus sign, okay? You take the low of that plus sign after you get into HVA, right, Bill? You take the exact low of the plus sign or the spinning top, whichever one it is, and you draw a line under it. You must have the body of the candle closed. The body of the candle must close below. The body of the candle, here's the body of the candle, not the wicks. The body of the candle Okay? The J signal is always opposite of number one trades. The black charts are standalone by themselves. J signal has nothing to do with the number ones. The arrows and the triangles have nothing to do with the black chart trades. Nothing. J signal is all by itself. J signal stand alone. The black charts are stand alone. We just use my Renko bars to pull ourselves in off of the doji or spinning top. Does that make sense? It doesn't matter what J signal is doing. We don't have to have it lined up on the black charts. We just use it as a pulling bar on my Renko bars. Okay? You don't have to have fib dots. You don't have to have anything. You're just using the three. That's why I keep the 3-sim Renko in here, because we play off of the red HVA and the red LVA. I hope that makes sense now. Okay? So the number one, that's another $400 trade based upon that. Now J signal, let's take a look at J signal. So here's the trades we had this morning before I shut the video off here for you. It's very, very simple how to trade this system. It's pretty cool. What we have is this. On J signal, all by itself, you can trade the black charts and J signal. Black charts are standalone, J signal standalone. So you can use J signal on all markets standalone. We already had our number 3 trades on the motive waves. And the J signal is very simple. The methodology on the J signal says this at the top. Market profile sets a trade up, and J signal as a trigger, and symmetry dots to scale out. The trigger, if you're using a 3-sim Renko on J signal, it broke LVA, take the first retracement, there's a J signal fib dots, there's my arrow, there's my triangle to get in. Then we broke LVA, there's my Fibonacci dots, there's my arrow, there's my triangle to get in. Then we get back inside LVA, break back inside, there's your retracement, you had a corrective wave back up. Then we come in the black charts, right? The only trade we had on the black charts this morning is the number 1. Remember, there's only one trade on J signal. We have only one setup on J signal called a number 3. A motive wave is with 5-minute trend. Market profile must break. Then you get a retracement. Or you get a corrective wave and you get back inside of LVA or HVA on the first retracement with the pull-in bar or arrows, triangles, which we had. And then the black charts are very simple. They state what? They state if I'm in a downtrend, sell the first test of HVA within 2 or 3 ticks. It comes within 2 or 3 ticks of my HVA. It hits right on it. My market profile calls the exact high. Then you must use a doji or spinning top to play off of it. There's your doji. Let it close below. We got the exact high again, just like we did yesterday and the day before off my market profile. And then look at my target. My target was all the way down. I said my target on the runner, right when I told you guys to scale out here. That's why I said to scale out. I said my target at this point, I said at 836, I said my target's all the way down here. All the way down here. Why? Why did I say that? 2 things. My second set of symmetry dots were down here to scale out, and consequently, look at my low value area. It's right at 48.87, and I nailed the low to get out. That's why I told you. I said get out, get out, get out. And I was dead on calling the low on that, so you can get out and at least scale your position so you reduce risk. Price can touch or straddle. Stops on the number 1 trade. You cannot have more than $150 risk on a number 1 trade. If you enter here and you got filled on the number 1, you cannot have more than 15 tick stop loss. A lot of traders only do 13 ticks. Almost, let's say 70% of my traders in the room do a 13 tick stop on all number 1 trades and number 3 off the black charts. They risk $130. So you risk $130 to make a $400 trade on that trade right there. It's almost a 4-to-1 reward to risk. Sometimes we'll get a 5-to-1 to 6-to-1. We're trying to get a $400 to $600 trade on a number 1. Sometimes, like yesterday and the day before, you'll get a $1,000 trade off of a $130 risk. You'll have a 9-to-1, 8-to-1 reward to risk. Okay? LVA has to break on the black charts. It's got to get away from it, and then it can retest it, and that'll be called a number 3. Okay? There's 2 setups on the black charts you have to remember. I'll shut this video off. There's a number 1. If the moving averages are in a downtrend, you sell the first test of HVA, right? There's number one. A number three, the next trade, we're not allowed to buy LVA. That's a target. The next trade will be here, number three. A number three says you got to break and retest LVA like we did yesterday. We had two big giant LVA retest trades on crude oil and gold. Remember yesterday? Here's what it's got to look like. You got to break. You got to retest. Break, retest, and you go short. When it comes within 2 or 3 ticks, okay? It'll look like that pattern, just like the J signal pattern. That's called a number three. All right? See how that works too? Pretty easy, right? It's got to get away though, because you're not allowed to buy LVA down here.